And speaking of two entrepreneurs, one guy doesn't even know he's an entrepreneur. The other guy knows he's an entrepreneur. Brent Wilsey, Chase Wilsey, Wilsey Asset Management. Guys, how you doing today? Great to have you along in the studio.
Great to be here.
So, Troy, of course, talking about, small business, and you run a small business. Let's face it. I run a small business, and we are arguably the least incentivized. We're the biggest taxpayers. We're the biggest employers and the least incentivized. And I think what you have to realize is, regardless of what happens in this next election, we got to survive either way. It doesn't really. I mean, it does matter, but we got to survive either way. So is this the hill we're going to die on, right?
Yeah, it's not going to die on this hill. And again, we have to deal with the new, whoever it is. And I like what he said, too, about how it's going to be a change. And no matter what it is, there's going to be a change to it. But, and I say America has the best entrepreneurs because we do adapt to the situation as bad as it is. And I hate on my CPA, like, I can pay how much in tax?
I want to ask you something. I came up with a theory yesterday, and I don't come up with very many good things, but I think I have some here. Because you get this all the time, too. I know you do. You get it on your radio show. You get it on, and I know you get it from your clients. Brent, if the economy's doing so good, why do I feel so bad? And you get that all the time. The other part of it is that, well, if the stock market's doing so good, how come GDP is so low? Here's my theory: is that GDP is think of that as the size of your economy, the sum total of all goods and services. Okay, 70% of that GDP is based upon consumer spending, as you and I've talked about a million times. If you don't have an expansion cycle, if you don't have good GDP, you don't have businesses, you don't have jobs, you can't spend money. It's a vicious cycle, right? I would argue that if you can't pay the rent, you're probably not the guy investing, right? If you're maxed out on your credit cards, you're probably not putting $100 a month into an investment account, correct?
Good logic there.
Okay, so let me tell you my theory. You see a stock market here that we've had 2,100 up days. We had a 7-year expansion cycle. We're doing great, okay? The people that are investing have also suffered in the economy, but they have not suffered to the point where they can't invest. I think that this is the picture that the economy and the stock market are two different things. They are related, but they're separate. And I would argue that if we had a better GDP, we had a better economy, we had better wage growth, we had more people working in actual growth like we had the 3.5% years like Ronald Reagan, that you'd see more people investing in the market, and the market would be doing even better right now. How do you feel about that?
I don't know. There's some people that Chase and I talk to, and you can talk to your blue in the face, and they still think the stock market is a gambling game. It's risky. They shouldn't do it. And so
it's a perception issue.
It's a perception issue, and I think people that have more money would invest, but not more people that because they have more money, because they're earning more, may not, because they just don't get it. And people love to spend money. There's people.
So you think a bigger problem, other than not having the money, is money habits.
Education. That's the biggest problem, is that people do not understand. And we try to explain people. Chase and I spend a lot of time doing this, explaining about the knowledge of investing and so forth. We can do it. And some people, that's smart. We do workshops. A workshop coming out this Saturday in San Diego to explain about the truth of investing and fundamental analysis. But there's still people say, I hear what you're saying, but I'm still going to keep my money in bonds. And we were talking about, I think this past week, we talked about the bond market now is the biggest bubble of the century, and people still say, I have to be in bonds.
Well, okay, so so I want to talk about bonds in just 1 second, but as you talk about change and you talk about investing, do you ever think in terms of, let's face it, we've gone through 7 years of horrible, we went through 7 years of horrible economy. We went through 7 years of a great stock market. That puts pressure on relationships. I read something yesterday that says baby boomers are getting divorced higher than ever before. Do you guys ever plan for that when you guys have to invest? What do you guys do when you're in the middle of an investment cycle? Right. You've got a retirement plan going on, and all of a sudden,
I do want to circle back to GDP and the correlation between the stock market too. Kind of one thing we think conceptually about is if we had higher GDP growth, that means consumers are out there spending more. What does that mean for businesses like Apple, like Kohl's, like Macy's, these consumer-driven businesses? They're going to be making more money.
I'm with you.
What's that do to valuations on the market if they're earning more? That brings the valuations down, so it makes the market more attractive.
So it is a fine line between having the money to invest and having the wherewithal to invest and having the discipline to invest.
Discipline, very important.
Right?
Discipline, yes.
Because it's not just a matter of you and I are going to invest more money if we make more money, right? But is Johnny Lunchbucket is he going to buy the new truck? We have a very big audience on American Forces Radio Network. You drive up to Oceanside, and what do you see? Brand new Camaros, brand new Mustangs, brand new trucks.
And that's okay to do that, but you also got to say, okay, I'm going to spend $400 a month on that truck.
But when you're 23 years old, it's an either or. It's an either or scenario. I'm pretty sure,
And
right?
maybe Chase can answer this question. One thing I think I've noticed more, and this is just from my own experience, it seems to me that young millennial women seem to be better at saving money than young
what do you think? How do you feel
men.
about
Is that? Have you noticed that?
I'd still say it's about 50-50. I mean,
Among your friends?
among my friends, I would say so.
My daughters
Yeah.
are, well, and maybe it's because they're my kids, because my kids are like, they throw everything in the. Here's the problem: is I taught my kids very early. If you make $5 babysitting, put $250 in the bank and I'll match it. You're never going to get a return on investment like that in your entire life. Well, they got used to that return on investment.
Yeah.
So now, though, they throw everything in the bank.
And they get pissed. The
And
bank's
they get pissed because they're not getting, which really get 11% on their money.
Well, I still think, kind of speaking about millennials, I think maybe the women are better savers, but I've personally had a harder time getting my women friends to invest.
Because they're scared.
They're scared.
Yeah.
Yes.
You know, that's interesting. Boy, you're going to get email on that. That's Chase Wilsey at WilseyAssetManagement.com.
I had nothing to do with that one.
Yeah. Brent and I are actually leaving the set right now, and we're looking for the helicopters overhead. Stand by right there. We're going to take a quick break. We're going to come back because we do have to talk about that divorce thing. Because
Yes.
And I want to see how you guys plan for that as retirement guys.
And also Amazon. I want to talk about
Oh,
Amazon.
my
real
God.
quick.
We were talking about Amazon last week.
Yeah.
I am on Amazon app. Yeah, we're going to talk about my spending habits. I'm the king of $8 purchases on Amazon. Stand by. All right, so we have the Wilsey boys in studio. We're having a discussion. We're having a discussion about a number of things here. Most notably, though, millennial, the female spending habits. I'm just going to tell you right now, Chase. I'm forwarding my email the entire weekend to your email box. So any personal stuff that comes through, just shoot over to me. But I'm just going to say, just weed out the stuff that's for you because I'm pretty sure you're going to see it. Chase Wilsey just went on record in saying that millennial women are afraid to invest. I'm just going to say, no, actually, that's not what he said. But that is an issue. It's been in the news for a long time that millennials are afraid to invest.
Yeah, it may just be my. We always talk about understanding the survey data.
Yeah,
I have
the open air indicators, right?
I have a smaller survey data than the whole nation.
But think about this, though. It has been a news story. It's been well published that millennials are taking their money and putting it under their mattress because they're afraid because they saw the contraction back in 2007, 8, and 9.
Yeah.
And that's one of the reasons you came on with us a year ago is because we wanted to talk about, here's a guy that's bucking the trend. And you're talking your guys and gal friends into, hey, put a little bit of dough aside. So let's go there. Has the needle moved at all, in your opinion?
A little bit. I mean, it's a very long process talking to millennials about investing and saying, hey, look, guys, we still have probably 80 years.
Well, that's the problem. You have 75 good summers left. Yeah. Why should I start now? So I think you need to change the narrative.
Maybe.
But let me tell you the narrative that I used on my girls, and I've used it on friends of mine who have youngsters, and I say, take a very basic retirement calculator that'll calculate in the cost of inflation, and say you have zero money now, and let's say you want to retire at age 65, and you put in $100 a month right now, and you never put in any more than that, and you put an 8% interest return on investment, which I would argue. I'm not in your business. That seems pretty conservative to me. I think
reasonable.
But I think it's reasonable. If you do that at age 23 until you're age 65, it's an enormous amount of money. And I would argue that it's easier for you to put in $100 a month away when you're 40 than it is when you're 20. So assuming you never put any more money away, this is your nest egg. Well, that nest egg might be $500,000 or $600,000 or whatever it is. But oh my God, it's a lot of money. Right. That's the narrative that I used on my kids. Yeah. And suddenly it was like, wait a second. So one Starbucks a day and I can do this? Yes, one Starbucks a day you can do this. It's $5 a day, right?
Yeah.
It's $150 a month if you.
But we like Starbucks. Yeah. So they got to drop the.
Drop something.
7-Eleven coffee.
Drop the Slim Jim and the Red Bull. Whatever.
There we go, yeah.
Whatever
drop
thing that you're. Yeah. Yeah. So, but I think isn't that the narrative you need to use? To say, look, it takes almost nothing. It changes the change in your pocket every day. to make a difference. And then suddenly the habit starts, right, Brent? Isn't that what happens?
I mean, that is actually the narrative I do use. And I say, too, we talk about $600,000. Wow, that sounds like so much money, right? Well, think about inflation. By the time I'm 80 years old, let's say, $600,000 is not going to be much. We do daily posts, as you know. We talk about doing a post called Dow 100,000. And, oh my gosh, that sounds crazy. But think about how crazy it thought to many people, many, many years ago about Dow 18,000.
Brent and I were on the radio together the same day when the Dow hit 10,000. Remember that? The Dow hit 10,000.
Remember 10,000?
And it was a big deal. It was a big deal.
Yeah, they had hats for 10,000.
Oh my gosh,
banners.
It was right around Y2K too, if I'm not mistaken. It was all sort of the same thing. But yeah, the Dow hit 10,000 was an enormous thing. It was right during the dot-com bubble. There was a lot of things going on at the same time. But you're absolutely right. And what it also tells you is that Dow at 18,000. Well, boy, the Dow was a bargain at 10,000. We should have bought in there, right?
Exactly.
If the Dow was a bargain at 10,000, it's a bargain at 18,000, depending on what point in the world you are, right?
Yeah, and I mean, it really shows the importance of investing because, as you said, you need to grow your wealth, and you need to grow wealth over inflation so you are more wealthy. Your true wealth is higher.
Right.
And what gets people off track is doing the strange things, like we talk about Amazon. And Amazon, great products and so forth. But Amazon got the death call today.
Okay, so what? So I talked about the death cross. Murphy, bring up the Dow for me, please. I talked about the death cross. So of course we all know that Brent is a fundamental money manager, and I have no business managing anybody's money. But up on top there, you see a blue line, and that is the short-term moving average. You see a red line, that's a long-term moving average, and the dotted line is where the Dow closes out each day. When that blue line invariably crosses below the red line, and that normally you see the market go down. You go back in history and it shows that. That's what's called the death cross. This is called a death call. What's the death call?
The death call is it's happened to Qualcomm, happened to Apple. When analysts came out today, actually two of them gave Amazon a $1,000 price target. And that to me is a death call because
$1,000 price. So every time anybody's got a $1,000 price target, they've gotten killed.
Yeah, because they came out with Apple, and I forget the time. It wasn't very long after they came out with a $1,000 price target. Apple was trading at the time around $750. It fell down about $400 at the time. What
do you think about Amazon as a company? They're doing these pop-up stores now, even here in San Diego, just 2 miles away. You're seeing these Amazon pop-up stores where they're selling books. I don't think they're selling goods and services like they do on the regular Amazon.
Right.
Is that business model need repairing? Is that a company going to be around for a while?
Yeah, it's a great company, but it's way overpriced. I don't know.
So talk about that. Have you looked at the balance sheet on that? Because I think when people hear Amazon's overpriced, they want to know why you think it's overpriced.
Yeah, and I mean the balance sheet, don't get me wrong, looks phenomenal. They don't have much debt on the books. They have a very strong current ratio, meaning they can pay off their current liabilities with current assets. But as my dad said, they are overpriced. They're trading at a PE multiple of well over 300.
Okay, so talk about why. So for the average investor that doesn't understand overpriced, what does overpriced mean to you?
So what we look at is different metrics for a business. So we're looking at the earnings, the book value, the cash flow, the sales as well. And we're looking at what are you paying for those different metrics of the business. And the way you look at that is you look at the stock price compared to those relative metrics. And right now, the metrics for Amazon are just, you're way overpaying for them. And metrics are comparable from business to business. Every business has sales. Every business has a book value. So based
upon, and it's much like what I look at a stochastic oscillator, which tells me if something's overbought or oversold, overvalued, undervalued for its time frame or recent trading range, you look at it comparatively speaking to the industry and other companies in that industry, and you can say if that's an overvalued or overpriced stock at that point.
Exactly, and we always look at kind of the mean going back 40 years, and that the forward PE, so the forward earnings, is 16.5. Amazon right now is trading at a ridiculous forward multiple, and I forget the numbers, but I actually did a...
Like, what's a ridiculous multiple? 16.5 is reasonable, is it? It was
over 100.
Over 100?
Yes. Yeah.
So what this means is that it's a bubble that may burst sometime.
Exactly, and that means they have to grow their earnings at a ridiculous rate to make it a reasonable value, and that's tough.
Two smartest guys in the room all the time. And you know what, Brent? I'm telling you what. Slim just left town. I'm sorry. This is Brent's last show.
Looking forward to those emails.
It's the Chase Wilsey Big Biz Show coming up starting on Tuesday. Yeah, Chase Wilsey at CSManager.com. He's the guy who said, guys, thanks so much. We'll see you Tuesday. Good stuff.